catastrophic collapse that America desires has only just begun. When global stock markets crash, when countless people are driven to the edge, when some gleefully ask me, so when can we buy the dip? I'm sorry, but I've been warning about this scenario for months. This crisis is only beginning. Right now, you see everyone in the market scrambling to sell their stocks, right? That means even if you feel like you've already lost a lot, even if you think you've sold your shares at rock bottom prices, that's just your perception. Because when the whole world is slashing prices and dumping stocks, if you list yours at $50, someone else is willing to sell at $40. So ask yourself, are there more people selling stocks or more people like us waiting to buy the bottom? In other words, from our perspective, the prices now are still too high. So when will it be cheap enough? Simple. When everything looks desolate, when even people who've never touched the stock market are in despair because their assets have lost massive value, when everything is practically being given away for free. Yes, you heard that right. If you're willing to peel back the layers of this game, you'll realize how brutal it truly is. The end of this crash will be the beginning of our bottom fishing phase. That's when the financial crisis really hits. That's also when the wealth that millions of people spent a lifetime accumulating will become the property of the capitalist elite. That's what we call a great transfer of wealth. Is it really true? Welcome to Tuat Tai Van. If you've been following me, you'd know that Warren Buffett started selling off U.S. stocks and accumulating cash as early as last year, back when the markets were still soaring because of Trump's re-election run. Many laughed at him, saying he was too old to play the game. And now those same people are the ones stuck at the market's peak. Just one tariff move from the U.S. government, and those who bought at the top are now choking on their losses. Meanwhile, Buffett emerges as the biggest winner, not just because he sold at high prices, but more importantly, because of what he sold. What do I mean? Last year, many couldn't understand why Buffett sold Apple, the company he held the most stock in. But now, it's clear. The U.S. is slapping the highest tariffs on which country? China. And Apple's iPhones, laptops, and AirPods are mostly made in China, right? Which means going forward, Apple products made in China and sold in the U.S. will face massive tariffs. In short, Americans will have to pay more for products designed in their own country. The result? Apple shares dropped 35%. Now you see, Buffett didn't just avoid the stock market crash. He sold off before the new president even took office and got rid of the very stocks most impacted by the new tax policy. So what does that mean? It means that regardless of who becomes president, the script has already been written. Tariffs are just one tool to ignite the crisis. And what's the end point of this crisis? Let me show you one more thing. Buffett also sold shares in Bank of America, his second largest holding. What does that tell you? If Buffett's moves were just coincidence, then why did Bill Gates, Mark Zuckerberg, and Elon Musk also sell off their own stocks last year? Another coincidence? And why is Li Ka-shing so eager to sell his ports and hold cash this time? Many say he's afraid of political risks. But is that really the reason? Let me tell you. In round one, the U.S. capitalist class played the interest rate game. In round two, which they're playing now, it's the tariff game. The playbook hasn't changed. They pump all the global capital into the U.S., causing worldwide economies and assets to collapse. Then they slowly scoop up the bottom. The difference is, interest rates suck money into the U.S., while tariffs make the rest of the world pay the price. So the key question is, how should we position ourselves in this second round? If you don't want to be a victim of this global asset chessboard, if you even hope to rise to the next class, then follow this channel. I'll continue to share more insights with you, and if you're worried you might forget what you just heard, that you'd waste your time listening but not take action, just click like on this video. That way, it'll automatically save to your playlist so you can return and review it anytime. Let's get straight to the point. After the U.S. imposed tariff hikes, what actually happened? First, the U.S. stock market crashed, right? Most people only saw the sharp drop in the market but never stopped to ask, where did that money go? In just the past 2 days, how much money has evaporated from the markets? $6.6 trillion. That's right, evaporated, vanished without a trace. But have you ever wondered how $6.6 trillion could disappear from the stock market just like that? In the stock market, for every loser, there's a winner. When the market crashes, people holding stocks lose money. That means those who bought at high prices suffer losses. But those who sold at high prices and bought back at lower prices, the short sellers, they make money. So who's been holding stocks lately? You've seen it clearly. Your friends, or maybe even you. It's retail investors. As I mentioned in a previous video, conservative estimates say that at least 80% of U.S. stockholders are retail investors or foreign investors. In other words, the $6.6 trillion that vanished from the market, most of it came from the pockets of everyday investors and foreigners. Put simply, that money didn't just disappear, it was transferred into the hands of short sellers. So who are the short sellers? Besides the short-selling giants like Soros, as I mentioned before, who else? Who had insider knowledge of the tariff policy before it was announced? Didn't they have the chance to short the market in advance? And right at the height of the crash, Trump tweeted that it was the perfect time to buy stocks, telling people to jump in and buy the dip. Then just hours later, he publicly announced a 90-day pause on the tariffs. The result? The free-falling U.S. stock market immediately rebounded. It shot back up. What does that tell us? Does the U.S. stock market now rise and fall based entirely on one of Trump's last-minute reversals or policy changes? Does it mean that if Trump tells you when to buy or sell, you could make money? Isn't there a real possibility of insider trading in all this? If you've been following my channel, you know what problems the U.S. government is trying to solve right now. First, they're running out of money. You can see clearly that the U.S. Treasury is almost empty. If the Treasury has no money, the government shuts down. Second, no one wants to buy U.S. government bonds anymore. Since 2021, U.S. bonds have been massively sold off, and their value keeps falling. Simply put, no one wants to lend America money anymore. So how did they solve the first problem? No money in the Treasury? Simple. If the stock market can rise or crash based on a single sentence or a simple policy shift from Trump, then the U.S. stock market has essentially become the government's ATM. When the Treasury runs out of money, they can deliberately trigger market volatility to pull out cash. First, create a crisis, short the market, pocket the profits, then push the market back up to lure retail investors, the so-called fresh grass or rookie investors, right back in. The whole drop has to be fast and sharp, but not last too long. If the crash is too deep, retail investors will be wiped out and the market won't recover. You might think what I'm saying sounds far-fetched, but these aren't just my words. Trump himself said it. Trump once said that a longtime friend of his, not his company, just the individual, made $2.5 billion in one day. That says it all. This market collapse wasn't just a crash. It was a massive transfer of wealth from the public to capitalists in the U.S. government. Now, you see many organizations claiming they'll investigate the U.S. government. I just laugh. And as for no one buying U.S. bonds, how does the government plan to fix that? I've said it many times. They want to intentionally create a market crisis to force money out of stocks and into government bonds. That's their strategy, but whether it will work is another matter. When the tariff news hit, U.S. bonds did rise for 2 or 3 days, but each of those days started high and closed low, with huge trading volume. What does that mean? It means a lot of people jumped in to buy bonds at the start, but in the end, they were left holding the bag. Why? Because when no one buys bonds at auctions, Wall Street firms are forced to step in. So when retail investors rushed in to buy bonds, Wall Street players, who had been forced to hold them earlier, used this as a chance to sell and exit. Why did they exit? Because they're stockpiling ammunition, cash, to bottom fish later and reposition their investment strategy. Moreover, if the U.S. government really solved its debt crisis, capitalists would lose control of the country. So we see U.S. bonds rising initially, but always opening high, closing low. And here's the kicker. China and Japan are quietly acknowledging that they're dumping U.S. bonds in retaliation. Since America sanctioned them, they're using U.S. bonds to fight back. So to be blunt, Trump's attempt to shift money from the stock market to bonds, it failed. And the U.S. pause on tariffs? It happened for two reasons. First of all, this temporarily solves the U.S. government's problem of running out of money to spend, but in return, the U.S. faces a massive backlash. So, is it really over? Right now, many people are revisiting a video we posted a month ago, titled "The One and Only Chance in Your Life to Get Rich Has Finally Arrived," and commenting that everything is unfolding exactly as predicted. But is that really the case? Let me tell you, this recent tariff hike is just a test, testing the waters. Raising tariffs is just like raising interest rates. Both are designed to blow up the global economy so American capitalists can go around buying up assets everywhere. The only difference is, this time, tariffs may become the trigger for a financial crisis. Here's what I mean. When interest rates go up, global money flows back into the U.S. because of the higher returns. So other countries have to sell off assets and pull capital back home to buy U.S. dollars and U.S. assets. When every nation is selling its own assets and currencies to buy the dollar, global assets and currencies lose value. That's when American capitalists sell their now inflated assets and use strong dollars to go out and buy up the world as foreign assets are being dumped. That's how they harvest the world in round one. Now, round two, the tariff war, is like robbing money straight from your country. What do I mean? Imagine this. Let's say the U.S. imposes tariffs on Vietnamese goods. Before you sold a part for $10. Now the U.S. slaps on a $4 tariff. So what can you do? You have two choices. First, to maintain your profit margin, you raise the price from $10 to $14. That means passing the tariff cost onto your customers. But once you raise your price, your product becomes less competitive, fewer people buy, orders drop, revenues fall. You end up laying off workers or even going bankrupt. This leads to rising unemployment in Vietnam. People have no income, so they stop spending. No consumption means the economy slows down. And once Vietnam's economy contracts, all its trading partners suffer and slow down as well. Eventually, everyone runs out of U.S. dollars, foreign reserves dry up, and local currencies crash. That's scenario one. Scenario two, you don't raise your prices. You eat the $4 tariff yourself. You still sell at $10, but now you must pay $4 to the U.S. government. So how much profit is left? Nothing. You lose money, and you'll collapse just the same. Many Vietnamese businesses won't be able to survive. They'll shut down, triggering an economic downturn. When your economy tanks, no one wants to invest in your country anymore. Everyone rushes to convert local currency into U.S. dollars. That makes your currency even weaker. Another trick? Many countries deliberately devalue their own currency. For example, the U.S. imposes a 40% tariff, but if your currency drops by 40%, then you're back to break even, right? This can keep businesses alive, but your national assets are now 40% cheaper. Simple as that. The yen drops, and suddenly people flood into Japan because everything's cheap. Bottom line, no matter what you choose, once tariffs hit, your country will struggle to earn any US dollars. No dollars means economic weakness. When the economy weakens, national assets like factories, businesses, and resources are sold off at fire sale prices. And most importantly, your currency will fall against the US dollar. At that point, American capitalists use their rising value dollars to buy up the world, from currency to assets, at rock bottom prices. So yes, US stocks may crash after tariffs are imposed, but in reality, the whole global market crashes too. So even if the US takes a hit, the US government is still determined to go through with it. Why? Because this is a winner-takes-all game. Drag the entire world to the bottom. In the short term, Americans suffer inflation, job loss, market crashes. But this isn't just America's pain. It's the entire world's problem. This is exactly like the 2008 financial crisis. But after 2008, the US was the fastest country to recover, even stronger than before. Why? Because when the global economy collapses and assets are dumped, US capitalists buy everything dirt cheap. In other words, as long as other countries are also in crisis, the US isn't really in a crisis. When everyone else is worse off, global money flows back into the US, where things seem a bit less horrible. That's why tariffs and rate hikes both aim to suck all the dollars in the world into the US. But the difference is, tariffs might trigger a global financial crisis, because this is no longer just economics, it's economic warfare. The spark may have started in the US, but the ones getting blown up are the rest of the world. You get that, right? Many people still believe Trump raised tariffs to bring manufacturing back home or stop the world from leeching off America. Honestly, I find that laughable. Why would the US bring back factories when it can just print money and buy up the world's resources and labor? So you're telling me now that Americans want to go back to being farmers and factory workers? Are you ready to do that? Let me tell you something. History is repeating itself. Tariffs are nothing more than a massive wealth transfer. On the surface, they look like a tax on foreign countries. But in reality, they're a hidden tax on ordinary people everywhere. Because the people will be the ones suffering. If you run a business or invest, your assets will lose value. If you're just working a job and doing nothing else, you'll face inflation. Prices rise, economies shrink, currencies crash, and all of this quietly transfers your wealth into the hands of American capitalists. So if you missed the first wave of positioning, didn't exit your high-risk assets in time, and now you're left with no cash or defensive holdings, then in this next phase, you still have a choice. Keep doing nothing and watch your wealth evaporate while the elite wage their financial war. What can we do? People like Buffett already knew. They saw it coming and positioned early. But retail investors like us, we have a different advantage: agility. Buffett may need months to move billions, but we wait until the money flow becomes clear, then ride the wave at the last minute and still make gains. In other words, big players create the trend. We just follow the trend, take our cut, and leave. That's our edge. Here's the kicker. Tariffs are also a bargaining chip used by the US in global negotiations. Don't want tariffs? Then buy US government bonds. Refuse? Fine. Your national assets will be dumped and snapped up cheap by American capital. Right now, whether it's Warren Buffett, Bill Gates, Mark Zuckerberg, or even us, we're all holding a pile of cash just waiting to go shopping for cheap assets. This tariff war, it's a test to see which countries float and which ones sink, who resists and who obediently buys US debt. And the result? Even the countries that claimed they'd resist still ended up dumping US treasuries, causing their value to drop by 8%. The US dollar kept weakening and capital started fleeing America. This is why I've consistently warned people, don't buy long-term US bonds. At the end of last year, I already began converting dollars into gold and Japanese yen. So now as the global stock market crashes, investors aren't moving their money into the US. They're running away from it. What does that tell us? It tells us that given the choice between buying US bonds or facing a financial crisis, the world chose the crisis. In other words, this time, the US tariff escalation might have gone too far to reverse. US stocks are crashing, the dollar's falling, treasury bonds are collapsing. If they save the stock market, they can't save the dollar. If they save the dollar, they can't save the bonds. Worst of all, the Federal Reserve and Wall Street elites aren't stepping in to help. Why? Watch my last video. That's the key. If all three markets die and no rescue is coming, the only path left is for the US government to rebirth itself through fire, by triggering a financial crisis and making the rest of the world pay the price. That's why you need to know exactly what stage we're in, and why US stocks are crashing so fast this time. It's simple. I buy a stock at $100, it rises to $200. I want to buy more, but I've got no cash. So I take my $200 stock, use it as collateral, and borrow $150 from the bank. I use that $150 to buy more stock. But then the US raises tariffs and the market crashes. Now the bank wants its $150 back immediately. If I don't pay, they'll liquidate my stock. But I don't want them to sell it. So I try to pay the $150, except I don't have it. If I had the money, I wouldn't have borrowed in the first place, so I can't repay. And the bank has no choice but to sell my stock. If millions of people are in the same boat, it triggers a mass liquidation on the stock market, regardless of price. That's why this time, the crash is so brutal. And if I don't want my stocks to be sold off, I'm forced to sell other assets I own, like European stocks, Japanese stocks, oil, Bitcoin, whatever. I'll sell everything just to raise cash, to repay the bank. In short, sell assets to stay afloat. Because right now, everyone needs money, not goods. To put it simply, when the bank asks you to repay a loan or issues a margin call, it means the bank is withdrawing the US dollars it had previously pumped into the market, and this leads to a global liquidity crisis. There are many sellers of assets, but very few buyers with cash. That's why assets can't be sold. And this might just be the beginning. To solve the liquidity crisis, money and assets in the market need to be rebalanced. The solution is simple. I mentioned it in a previous video. The only way is for the US Federal Reserve to step in. That is, expand its balance sheet and print more money. The Fed has two choices. The first option is to intervene now while keeping interest rates high and simultaneously inject money into the market. That means they won't let the US stock market crash too hard. They'll print money to ensure there are enough dollars to keep the market running. But at the same time, the US government will have to pay very high interest. In this scenario, the stock market might recover slightly, but won't see any major boom. It could even rise briefly and then drop again in the long run. The second option, which I believe is more likely, because the Fed chose this path both in 2008 and in 2020, is to wait until the financial crisis or market crash becomes more severe before taking action. At that point, they'll print unlimited money and use it to lend to American capitalist corporations at 0% interest. This approach aligns with the interests of the capitalist elites behind the Fed and the US government. As I've said, if the US government continues using tariffs to trigger a global financial crisis, as long as the world economy is worse than the US, America becomes the best country, a safe haven for global capital during crisis. At that time, U.S. bonds will have buyers again. For the oligarchs behind the Fed, when the world collapses and global assets are sold off at dirt cheap prices, they just need to turn on the money printer, borrow at 0% interest, and scoop up those cheap assets. Thus, U.S. stocks and global assets will return to the hands of American capitalist corporations. At the same time, the U.S. will also solve the issue of no one buying their bonds, and the amount of interest to be paid will sharply decrease thanks to 0% interest rates. That's why, since last year, I believe that triggering a financial crisis to return to 0% interest rates and expand the Fed's balance sheet is the more likely scenario. And this is exactly why Buffett sold off shares of American banks. Because when a financial crisis happens, no one can repay the banks, and banks immediately suffer massive losses. If you're observant, you might have already identified the right moment to enter the market and catch the bottom. But that time is not now, because stock prices in other asset classes might still spike due to a single statement from the U.S. government, or the market could collapse drastically. If you enter the market now, the money you make will only be fast money, not big money. The most important thing is that you might make money today, but lose it all tomorrow. You might even have to cut losses right after entering. You'd have to frequently set stop losses. Therefore, this isn't the right time for short-term investing or speculative trading. That's why we've chosen to go into hibernation for now, meaning we're not focused on which asset will rise, but which asset can protect our wealth from losing value. For that reason, we started converting dollars into gold and Japanese yen since last year, and now we're more determined to hold on to them. Previously, we also experimented with short-selling Tesla stocks short-term, and the result was decent. But we emphasized that it was just an experiment. The real short selling will happen when the Fed or the U.S. government uses tariffs to trigger a financial crisis, causing the U.S. stock market to crash entirely. At that point, we will go heavy on shorting. And once the Fed begins expanding its balance sheet and injecting cash, we'll slowly follow the trend and catch the bottom. That's our major strategy. I also want to share that in 2008, many people were just construction workers or restaurant waiters. But now many of them, hey, have become wealthy mentors beside me. After 2008, social classes began to solidify. Those who used to wait tables now don't need to work at all. Their assets generate monthly, even hourly income greater than what most people can earn in a lifetime. As for me, I was born later. I was still young at the time and missed that opportunity. But this time, the opportunity is coming again, and I'm ready. Most importantly, if it really happens, I'm fully prepared, sleeves rolled up. And if that opportunity doesn't come, I lose nothing, right? I'll just reposition again. So if you don't want to miss out on the upcoming chance to enter the market, what you need to do is prepare now. First, align your mindset with mine. Understand the investment mindset and strategies I've shared, then make them your own. Don't wait until the moment arrives to ask, should I buy now? Can I still buy this asset? I'm stuck with losses. What should I do now? Because once the opportunity passes, who knows how many more years you'll have to wait? The situation ahead will definitely become more and more volatile. But due to limited time, I'll stop here for today. I'm sharing free knowledge about becoming wealthy, becoming an entrepreneur, investor, and achieving financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video widely. I sincerely wish that everyone who liked this video will soon achieve financial freedom. As long as today's video gave you one or two helpful insights to live better, then I'm already content.